Hello and welcome. It's a Saturday morning. Well, we're trading today. It's a bit of a rarity on a Saturday morning, but the markets are testing the backup site in Chennai. I'm Nigel D'Souza. With me is Ekta Batra. Ekta, a rarity, but the market's trading well in the green, and 22,400 is here.
Hi, Nigel. Yes, absolutely. Well, for what it's worth, it's a Saturday, a trading session for everybody. So let's enjoy the next 1 hour. And it seems as though the up move is probably intact.
Well, that's right. I just want to point out one thing. The reason that the backup site now is on the opposite coast in comparison to Mumbai is earlier Mumbai and the backup site was in Pune. But in case this part of the coast gets hit for any kind of reason with regard to a calamity, that's why I think around 13 years or 14 years ago, I think, the backup site was shifted from Pune to Chennai. So a bit of a hedge. So you have on both the coast, you have the official site that trades for the NSE and you have the backup site on Chennai. Started my career, in 2008 at the NSE, so I'm aware of a couple of these details. Just want to put that for our viewers as well.
Yes, absolutely. Well, that makes sense because you don't want to put all your eggs in one basket. But nonetheless, we do have a trading session for the next 1 hour ahead of us. Just want to point out that, yesterday was a great close for the markets. The markets did post a record high in terms of close on the back of a strong GDP and the markets, the Nifty ending above 22,300. Well, for today, we definitely do have the US markets which closed positively. We did have the S&P above 5,100 for the first time ever. So all of those cues are lining up well.
Well, that's right. The global piece is not bringing any kind of shocker. So that's good news for us. But for the month of March, I'll want to see whether the large caps, they can outperform from here. Because what's happened, say in the last 12 months or so, the mid and the small caps have done far better. But maybe getting towards the end of the year, we could see some catch up from the large cap names. And maybe there'll be some kind of flows that move out there. For whatever it's worth, Ekta, we're trading a little bit flattish. I don't think too many stocks on the Nifty are moving too much. Britannia is one stock that's up close to around 1.5%, only around 8,000 shares being traded out there. And Divi's Laboratory down close to around 0.5%. But I think if you just pull up, Ekta, more than today's trading session, you pull up the Nifty as well as the mid-cap index for the last 1 month or so, you'll see that the Nifty has actually outperformed the mid-cap index. And that's something that could continue in March as well. Remember, in March, a lot of these treasury books, lots of HNIs, they would have had a very, very good year. So they may take some money off the table. That's the table that I'm talking about, Ekta. Last 1 month, the Nifty outperforming the mid-cap index. Last 1 year, the mid-cap index outperforming the Nifty and outperforming by quite a large deal.
Yes, absolutely. I think last year was just marked by interest in the small caps as well as the mid caps. So maybe this year could actually see people probably hedge their bets and, maybe focus more towards the Nifty as well as the large caps. But nonetheless, in terms of the markets, we have the mid-cap index, which is managing to hold up with a gain of around 0.2% at this point in time. We have a couple of stocks which are moving on the upside. So something like an Aptus Value Housing is up around 1.5%. We have Nykaa, which is up around 0.8%. Narayana Health is seeing a little bit of a comeback, and Max Health as well. Remember that the hospital stocks were under pressure in yesterday's trading session. So we're seeing some amount of traction there. A couple of others include something like an SJVN, which is seeing some amount of interest on the upside. On the downside, Brigade Enterprises from the real estate space, JB Chemicals and Pharma, Zydus Life, to name a few, which are a bit sluggish at this point. Expect volumes to be obviously lower in today's trading session and maybe the price action to be limited as well.
Okay, let's get in our technical experts then. We have Mitesh as well as Srikanth who are joining in on a Saturday morning. Guys, good morning and good to see you in. Thanks so much for joining in. In the last 13 years or so, we haven't had a chat on a Saturday morning with regard to markets and live on television. Maybe otherwise we have met at various conferences as well. But Mitesh, you go first. On the Nifty, how do you see things shaping up? The first day of the series set us up for a rather big move. And maybe we could see much higher levels in the month of March, though this market could be prone to bigger moves in the broader markets because it's heavy. The market-wide open interest is the highest we've ever seen. You go first, Mitesh. Tell us the view on the Nifty.
Yeah. Nigel, my understanding is that the markets basically are now showing signs of continuation on the upside after getting past the highs of 22,250. And as long as we are about 22,200, I think maintain some kind of a positive bias over there. And having said that, I think, we will look at a test of 22,500, 600 zones to begin with. Also, my understanding is that the indices, despite being heavy, I think have some kind of long consolidation going on. So I think that should come into play on the positive side. Um, Overall, I think this does look like a market which possibly could do. As I said, I think 22,500, 600. But in case we see no kind of weakness coming in, then I think if the Bank Nifty starts participating and covers for the underperformance, good chance that we are looking at 23,000 as well. So stay positive till you get any signs of reversal.
Okay, well, I think, yes, definitely the markets are positive. 23,000 can't be ruled out. Shrikant Chauhan of Kotak Securities is with us as well this morning. Shrikant, over to you. Are you targeting 23,000 on the Nifty anytime soon?
Morning, everyone. Yeah, I think the way the market is forming its formation on daily and weekly basis. One thing is very clear that this market is going to be more and more volatile as the event, as the market will start approaching to the event. But if we see the entire pattern of the market, yes, we can see the levels of at least 22,600 on immediate basis. But in the long run, 23,000, 23,100, as Mitesh said, I think that looks achievable. Again, the bottoms and supports have shifted from the levels of 22,000 to now 22,200 to 50. So the ideal strategy should be to look for adding position if there is any correction in the market. So in case if we see any drop in the next week below the levels of 22,300, then certainly we should look for adding some positions. Yes, we are expecting 22,600 on the higher side, but Bank Nifty is like forming some interesting formation. And based on its overall formation and the way this time the performance from all the private banks, including the PSU bank, I think Bank Nifty is going to cross its previous high of 48,600. So there also we should be more and more active.
Okay, if the Nifty bank can go to those levels and make fresh all-time highs, who's to say that the Nifty doesn't even move up from here as well? Got that, gentlemen. Difficult one, but try to give us some picks for today as well. Mitesh, you go first.
Nigel, apart from the fact that we had some buy calls and banking names in the morning, I would recommend buying on NMDC. It's been recommended earlier, but I think this still looks like showing good continuation in the next few days. So keep a stop below 228 here and look for targets of 245 to begin with. We can eventually see higher levels. And I'll maintain buys on Tata Steel and SAIL. Disclaimer that we have added both the stocks in our portfolio yesterday afternoon and today morning, so there is some vested interest. But that apart, I think JSW Steel also comes on radar. Here I would recommend buying with a stop below levels of 825 for targets of 865.
Okay, Shrikant, what about you?
Yeah, I think metal stocks are like really doing well. In that Tata Steel, Steel Authority, JSW Steel, all are like showing a lot of strength. But specifically, we like Steel Authority, which is currently around 135. And the entire weekly and monthly pattern of the stock is indicating us that it is going to surprise everyone in next few months. So broadly, we are of the view that based on technicals, we should look for adding this stock at current levels, more on dips. In the near term, we are expecting 145, but in the medium term, in next at least 1 or 2 months, we can see the levels of maybe 175. So Steel Authority looks good to buy at current levels with a stop loss close to 127. And we also like Coal India, which is around 450. There also the formation is of rising top, rising bottom. It is consolidating. Based on formation, I think it is heading for at least 475. So Coal India is also a buy at current levels with a stop loss close to 434.
Okay, all right, gentlemen, thanks a lot for that. It appears that Chinese stimulus is what the street is looking forward to and explains why some of these ferrous-related names did very, very well yesterday. Thanks a lot for joining in. Well, let's get in Gurmeet Chadha then, Managing Partner and CIO of Complete Circle, who joins us on the show. Hi, Gurmeet. Good morning and good to see you in on a Saturday. I think cricket and that, on the jogging could have taken a bit of a break, at least for now. I'm not sure when you're already done with it in the morning. But I wanted to ask you about one of these stocks that came back in style in the past week. That is L&T. And it seems like it wants to take some leadership now. It was up close to 7% in the last week itself. What's your view on that name?
Hi, Nigel. Always good, and first time probably connecting on a Saturday. I think L&T had a very good run before. Some concerns typically come that closer to election, the government slows down. I think in the interim budget, although the quantum of capex government announced was pretty good, but as a percentage, it was lesser than what they have done. So there was some consolidation there. But I think multiple levers working, Nigel. One is the fact that the hydrogen electrolyzer orders are coming in. The Hyderabad metro now has stabilized. That was a bit of a drag. L&T also is a proxy play on defense as well. And there were initially some concerns on even Middle East slowing down. But if you see the management commentary, they highlighted without Middle East the order pipeline and which we called the bidding universe upwards of 5 lakh crores, which they have over the next 6-9 months. So I think it's the best play on the capex cycle. India, if you see Indian corporation, the capacity utilization has now crossed 75%. I've been saying this earlier. This reminds me of 2003 to 7 cycle, and I think L&T is a bellwether play. I would just be watchful of the working capital as well as the margins there in the short run. Other than that, I think it looks good even at these prices.
Okay, all right. Gurmeet, hi, welcome to the show. Just wanted your thoughts on the two-wheelers in terms of the auto sales. We had Bajaj Auto as well as Hero, which reported a good set.
I think a lot of the good news, Ekta, probably is in the price. It's just see the run up in Bajaj post the buyback. Hero also from the tax search related news to at around 2000, it's doubled. My sense is the rural economy is showing still some softness, as evident with the Q3 GDP data. It will take a little more time for it to come back. I think the better place to play the ancillaries there more because you get a better representation. So we like Sandhar Technologies. It's one of the largest player in locks. The two-wheeler mix used to be very high. It was just dependent on Hero at some point of time. Now they have 3-4 labels. They're now making frames for TVS, Apache, as well as their best-selling models. They're making industrial cabins. Also, they have a very future-ready portfolio as well, as far as EV is concerned, as well and the smart locks as well. So that's something we like. We continue to like Uno Minda. Surprisingly, hasn't done too well, despite Maruti and Bajaj, which are its two clients, doing very well. More kit value per car there as well, and Sona BLW. Sona BLW not exactly a two-wheeler thing, but just to play on the rising EV adoption in India.
Okay, all right. Well, Gurmeet, just hold on. We need to take a short break. But up next, we're going to be talking to Arun Ramchandani, who's the Executive VP and Head Defense of L&T, as the company has signed a contract worth over 7,600 odd crores for procurement of close-in weapon systems with the Defense Ministry. Stay tuned.
Welcome back. Hope you're having a good Saturday morning. Well, we've got a few minutes more of the market action. So let's run you through a couple of stocks that are moving around. HG Infra, they received an LOA, letter of acceptance for a project worth 447 crore rupees from South Central Railway. So explains why that stock is seeing a bit of an uptake. Some of these companies actually, they are gearing up their order book and, that's looking quite healthy. Getting into elections, maybe fresh orders may not be coming for this cool-off period of sorts. But some of these stocks, they are good on the order book, and now they'll have to focus on execution as well. But let's talk about the big boy, L&T. Well, the company has signed a contract worth around 7,669 crore rupees with the Defence Ministry for procurement of CIW, that's close-in weapon systems. To discuss this and more, as well as how is their business shaping up, Mr. Arun Ramchandani, the Executive Vice President, joins us on the show. Hi, Mr. Ramchandani. Thanks so much for joining in, sir, on a Saturday morning. This is a rather large order. Give us a few details of it. What could be the execution timelines of this, the potential margins as well, and what does this take your order book to?
Okay, so by the end of this financial year, we hope to have an order book north of 26,000 crores for the defense segment. We did... with these orders now in our order book, we have potential to execute these over the next 5 years, and deliveries will start very soon within the next 2 years.
Okay.
I would probably, Go ahead.
Go ahead, sir.
Yeah, just to brief you a little bit about the orders, we have the close-in weapon system and the high-power radar system, both for the Indian Air Force. And both of these contracts would be executed now simultaneously, and we would be delivering into various Air Force locations over the next 5 years.
Okay. So, sir, you have a strong order book on hand when it comes to the defense space. What can you guide the market for going into FY25 when it comes to incremental order inflows?
So we have a couple of orders that are in the pipeline. We have the repeat of the K9 Vajra systems, for which we have completed the contract negotiations, and we expect the Cabinet Committee of Security approvals in the near term. We have various other systems that we are looking at, like the CIWS. There are the air defense guns for the Indian Army, which we are looking at. And of course, there are a plethora of other systems that we are working on. So overall, we see a continuing trend in our order book, and we are quite hopeful that we will see growth of significant growth in the order book in FY25 as well.
Okay, all right. Mr. Ramchandani, give us a few details. I think you said by the end of this fiscal, the order book goes to around 26,000 crores. Did I get that correct?
Yeah, that's right.
All right. And in FY25, what kind of a revenue number should we look at from the defense segment? Some part of this 26,000 crores will get executed. So you've given us the broad timeline. 5 years, all the 26,000 crores get executed. But if you could break it up for us year-wise, FY25, FY26, what could revenue recognition look like? And also a rough idea on the margins?
So all I can say at this point is that we do expect significant growth in revenue numbers year on year. We should report good growth in revenue this year as well, and in the following year.
Let's quantify it, sir. Mr. Ramchandani, let's quantify it a little bit. Should we look at a 15 to 20%, 20 to 25% on a low base? I think sky's the limit. So quantify it. Give us a broad range at least. And you were getting to the margin front, which I would like to hear as well. Please go ahead.
So I'm going to be a little guarded on this and not give you any numbers right away, just, because of any future speculation. But I can just firmly confirm that we will see good growth on revenues. And on margins as well, we should see some growth on margins.
Okay.
These are, of course, the early phase of these order executions. So the impact will not be that significant, but we do see some growth on margins as well.
Okay. So, Mr. Ramchandani, just want to understand the potential opportunity from this space. I wanted to understand what exactly is happening when it comes to upgradation of legacy weapon systems, not only in India, but in terms of the export market. How much of an opportunity is it for you currently? How much of your order book comprises of it? And that's probably going to be something which will have a lucrative, pipeline going forward as well, according to me.
So, see, many of the big ticket items are the new programs, but you're very right that both in India and abroad, and especially amongst the developing countries, there is a lot of focus on upgrading and modernizing legacy equipment. And this is something that we are very good at doing because our business strength comes from our in-house R&D. And we have the ability to look at, systems which come from different backgrounds, origins, and legacy, and plug into them, bring in modernization into all of them. And we do see that both in the Indian market and in the international market, there is scope for such upgradations. Typically in the Indian market, we are now working on upgradation of the BMP-2 ICVs, which are there in large number in the Indian inventory. And we believe that projects like that could have good scale. Likewise, there is potential in the international market for upgrade of legacy systems.
And just on the export market, how much is it as a percentage of order book? We do understand that there have been visits which are taking place by potential clients. What is the order book there and the potential?
So right now, the exports is small. I mean, it's just about 4 to 5% of the order book, but there is potential to grow. Of course, a lot of things are happening in the Indian market. The thrust on domestic production gives us ample opportunity to grow significantly in the Indian market. In the export market, we have to, entrench ourselves and then look at greater growth. But I would say that potential exists in both the markets. The export would over a period of time, probably settle at around 10% of the order book. But we still have some way to go for that level of export orders.
All right. So, Mr. Ramchandani, say by FY26, it moves to 10%?
We will see. We are targeting that kind of a scale.
Got it. All right. And, the opportunity size is something that we missed out, if you want to quantify that, because you all are bidding for various orders. But the potential, the total pie could be how big? And then you'll look to get a part of that.
So the total pie of orders run into trillions of rupees. And we are competing in many segments, right from the submarines to warships to the light tank, battle tanks, armored platforms, various land systems. So the potential is very big. At what rate all of these requirements will get converted into RFPs, into contracts, that needs to be seen. But I think the momentum is high, and I would expect that these would get converted and come into our order books in the years to come.
Okay. What about maybe narrowing in a little more on aircraft manufacturing? I understand that you're in the tier 1 space when it comes to that. You have expertise in submarines, but probably full-fledged aircraft manufacturing, is that something that you would explore?
For now, we are not looking at that. There are already other companies that are looking at aircraft integration and aircraft rollout. And we are looking to be part of that supply chain as a tier one player, whether it is in aerostructures, in avionics, and we've identified certain segments where we can have a play. So for now, we are not looking at that. We are certainly looking at unmanned aerial vehicles, and we are working on full-fledged unmanned aerial vehicle platforms. And these could be large platforms as well. So that would be our play in the aero sector.
Okay, all right, Mr. Ramchandani, it's a pleasure talking to you. Thanks so much for joining in on a Saturday morning and giving us an update. Order book headed to around, the mid 20,000 odd mark. Currently, exports only around 4 to 5% of the mix, but headed to around 10% by FY26. We wish you a good day ahead, sir, and wishing you and your team at L&T all the best. After all, defense for the country is of utmost importance. Appreciate you joining in.
Thank you.
Well, let's get in Gurmeet Chadha. Gurmeet, you already gave us your view on L&T, and you have the management sounding very, very positive on the defense vertical. How are you all playing this theme? Defense has been a space that's been on offense. Many of those companies have done very, very well. This is a smaller part of the business of L&T, but with tremendous potential. How do you play this theme?
So Nigel, I said L&T is part of our core holdings amongst actually our top 5 holdings in the portfolio. We were lucky to actually get in much early last year. We have solar industries where defense order book is currently only 8-9%. And the kind of work they are doing in hand grenades, Pinaka rocket, I think has a potential to add 4,000-5,000 crores to the defense book over a period of time. They have others, they're working on drones with Nagastra range. Very impressed with what I saw in the Defense Expo in Pune just now. We have added Zen Technologies in few of our portfolios. Zen makes simulators and simulators for driving and basically for your war preparedness with the kind of geopolitical situations we have, internal security threats we have world over these days, and they've applied for almost 150 patents. Very, very good innovative company, to look at. That's the small part of a portfolio, and we made one mistake of exiting HL a little early, but happy to look at that again if we get a better price point. I think the air defense system, even if you see the interim budget, the budget had a 54% jump on air defense and aero engines alone. Recently, the DOC accorded 97 more Tejas order to HAL, and more than 60% revenue comes from repair maintenance, which is a very high margin stuff for them. So they can maintain that 24% EBITDA, which is very, very rare for a PSU in this space.
Okay. Well, Gurmeet, I had to ask you about the hospital space. That was the one which was under pressure yesterday. And there's anxiety within, the entire industry that what might happen if in case rates are standardized even to a certain extent. What would you do if somebody holds Apollo hospitals at these levels?
It's run up quite well if you see it up. And I think there will be some near-term sentimental issues as well, and I think I don't mind taking some money off the table if you've made good money, if your entry points have been, let's say, a year or a couple of years back. Wait for better clarity to emerge, because right now, taking a call right now is on the speculative regime. And mind you, Apollo or Medanta, they trade at very high valuations. It's not that you have a lot of valuation comfort. Markets are making new highs. I think barring Narayana Hirdale, which probably is still slightly better off and more at the mid-range, and they've sorted their capital allocation more. They're more focused now on tier 2. I think barring that, I think there's little valuation comfort in hospital space. Although their model also, along with hotels, it's not a like-to-like comparison, has turned quite asset-light vis-a-vis what it was in the past. So if you get a good dip, and if you've not picked up any hospital stocks, I think that's the probably time to look at it. For now, I think no harm in taking some money off the table.
Okay, all right. Gurmeet, request you to stay with us. Let's hop across to my colleague Upasana. She's joining to tell us all the top stocks that are on the news. Upasana?
Well, first up is Cipla. The company completed transfer of its generic business to its subsidiary Cipla Pharma. Also, the US FDA conducted inspection at the company's manufacturing unit in China, and the inspection concluded with a 0 observations. Next up is Paytm. The Financial Intelligence Unit has imposed a penalty of 5.5 crores on Paytm Payments Bank for volatility for violating money laundering norms. Next up is Torrent Power. The company gets a LOA worth 440 crores from NTPC Vidyut Vyapar Nigam, mainly for the supply of power from gas-based power projects. Also, the company receives project worth 2,700 crore from Railway Energy Management Company. Next up is IRCTC. That also remained in focus. It signed MOU with CRPF for onboarding catering services to CAPF personnel during the movement for duties. Next up is Rainbow Children's Medicare Limited. The company commenced new 80-bed spoke hospital at Tamil Nadu. As on date, the company says that along with its subsidiary, it has an existing total bed capacity of almost 1,805 beds in India. And not to forget, Indoco Remedies, the company has commenced its commercial production on 1st March 2024 from its greenfield manufacturing facility located in Aurangabad to manufacture oral care products. And lastly, InfoEdge, the stock saw a sharp downtick today as the company's mobile application is delisted from Google App Store. And company says that the delisting of company's mobile application from Google Pay came as a surprise. The company is also reviewing and evaluating the next course of action and is working with Google, is what the company has said. And it also clarifies that the users who already have the company's mobile application downloaded on their mobile devices can continue to use the same.
Oh, good to hear that. Thanks a lot for that, Upasna. Well, Gurmeet, coming back to you, how do you play the metals theme? You know, one way of talking about it will be you can be patriotic and say, yes, India is doing very well. The valuations, in fact, may be a little frothy, but you have to participate in that. Another way could be, find a way to invest in this rebound in China. And one such theme that could play out is the metal stocks. Whether it's ferrous, non-ferrous, whether you want to take the stainless steel stocks as well. Jindal Stainless, that stock is up close to 15 times in the last 5 years. The promoter still buying shares in the open market, 500 crores worth of shares out there. And these ferrous players, Q4 could be a compression in margins. But still the street is looking ahead. China will rebound. Good times will come in 2024. How are you all playing this theme?
So Nigel, as said, I think I'm a believer that we are in the capex cycle. But with metals, probably you got to be more tactical. You can't really. So if you were in Tata Steel from 2009 to 19, you did not make any money, and then you made a big money within 2 years, right? So you got to be tactical here. I think we are playing it through two routes. One is the turnaround story. So we were early in Mukand when Bajaj picked up the controlling stake of 74%. They infused almost 1,500 crores by selling a land in Thane to one of the data centers. They are probably likely to do more asset monetization there. And now they're rebuilding it up. They're paying off debt. They've got a very nice guy from Jindal to head it. Mr. Bajaj, Neeraj Bajaj personally taking a lot of interest there. And still at a very low valuation compared to Jindal, or adding more to machine building space as well, other than being in stainless and alloy steel. And they do very high value added stuff. So it also depends on what grade you make, right? So they have this ability of shifting grades. This is the pricing pressure you see in the market. So that's something which is more core for us. And tactically, whenever there's any sharp fall in metals, we don't mind, taking some tactical call, both in ferrous and non-ferrous things. We saw the movement in Hindalco some time back. So was Tata Steel in some of our non-discretionary portfolios.
Okay, all right, Gurmeet. Well, let's focus on another piece of news. India's Financial Intelligence Unit has imposed a penalty of over 5 crores on Paytm payments for violating the anti-money laundering laws. Ritu Singh is tracking the story. She's here with more.
This is a statement from the Government of India's Financial Intelligence Unit, which has imposed a 5.49 crore penalty on Paytm Payments Bank for violation of its obligations under the Prevention of Money Laundering rules. Now, this press release says that they had initiated a review of the Paytm Payments Bank company on receipt of certain information that they got from law enforcement agencies about certain entities that they haven't named that were engaged in illegal acts, for instance, including been, organizing and facilitating online gambling. And FIU also found that the proceeds of this crime were routed and channeled through bank accounts which were maintained at Paytm Payment Bank by these entities. And therefore, the Financial Intelligence Unit issued a show cause notice to Paytm Payment Bank for violation of prevention of anti-money laundering rules, which essentially means that there was not enough oversight on the flow of funds through the accounts at Paytm Payment Bank. And after considering the written and oral submissions that were made by Paytm Payment Bank, you now have the Financial Intelligence Unit imposing that 5.4 crore penalty on the bank. Keep in mind, this is very similar to what we've been reporting about the KYC lapses, which RBI also observed at Paytm Payment Bank, leading to the crackdown and the restrictions that the bank has now been placed under. To make it very clear, this is not on the founder, not on the company, but just the weak or the lack of oversight on the accounts that they have maintained, because of which RBI took that action. And now you have the Financial Intelligence Unit also finding the bank. Also, we've had Paytm Payment Bank making this disclosure to exchanges that it has been, it had received notices from law enforcement agencies looking into specific accounts. We also had reported earlier that there were plenty of dormant accounts which RBI had found in its own inspections, which is also all part of the reason why these restrictions were imposed. And now this is just the latest in a series of actions that we've seen against Paytm Payment Bank.
Okay, yes, absolutely, Ritu. Well, Gurmeet, your call, Paytm.
No, I think it's in the speculative domain. I will avoid till more clarity emerges. Let them migrate and do some more banking tie-ups. I also want to see how the migration happens this quarter numbers. And wherever Financial Intelligence Unit gets involved, the violations are more serious at the payment. Although I think the fine is relatively minor, and the nature of the observations are also minor, which I think probably will bring some relief to promoters. And it's a very strong brand. Let's hope how things work out for them. I think there are better options in the new age. I think Zomato has done a great turnaround. I was very impressed with what Blinkit is doing. It was up 27% quarter on quarter. The food delivery was up 10%. The contribution margin has improved to 7.1%. The only key area here is, I want to track is the take rate. If they can maintain 22-23% and the threat from ONDC. I think that's something I would like to watch for, but I think there's a lot of potential here, and almost 3 lakh riders with a lot of data with them. In fact, what we are having a weekend, they know it everything. So I think if they can work out more on that, I think this looks very interesting now.
Okay, all right, Gurmeet, thanks so much for joining. And what's the plan today? Is it going to be cricket? Is it jogging? What is it?
So cricket in the evening, Nigel, and bit of catch up with some movies.
Okay, super. All right, and Chole Bhature to will be at some point of time over this weekend. So have a good one, Gurmeet. Appreciate you joining in and giving us your take on a whole host of those stocks. For the time being, we'll slip into a short break. Up next, we'll connect with Mr. Sunil Subramanian, the MD and CEO of Sundaram Mutual Fund. Stay with us. Welcome back. Very low volumes, markets virtually unmoved as we speak, but a good time to get in another market voice. We have Sunil Subramanian, the MD and CEO of Sundaram Mutual Fund, who joins us on the show. Hi Sunil, good to see you after a while and have you on the show. Well, the markets have done very, very well. The problem now is, if you got in, what should you do? Should you add? Should you book some profits? And we are coming to the end of the fiscal year, so it could provide some opportunities as well. Before we get to stocks and sectors, I wanted to understand, how do you approach this market? The place to be in has been the mid and the small cap space, made you big money. But do you think now, going by the valuations, it's better you top up on some of those large cap names?
No, I would say that maybe a small reallocation into large cap away from mid and small cap, very small. So I would still recommend the portfolio to be roughly evenly divided between mid and small caps and large caps, which was earlier at about 70%. Now we will tone it down. But the key point, I think, to take a call is that you mentioned about valuations, right? I think the valuations are reflecting the flows. So if you look at the fact that what's driving up mid and small cap, what's driven it up over the last year, year and a half, and what's continuing to drive is the flows from the domestic part through the SIP book. Now, unlike a lump sum based flows, which can wax and wane, SIPs are consistent flows. So you look at, they've touched 19,000 crores almost. And our latest study shows that about 30% of that book is in mid and small cap, and another 30% is in multi-cap. So if you take that half of a multi-cap portfolio would go into mid and small cap, you're looking at about 45% of the 19,000 crores, which you're talking about 8 to 8,500 crores buying power for mid and small caps in the hands of mutual fund managers consistently being present. So I see no reason to panic in terms of, you thought the SEBI regulation came and all that. So the market absorbed that in no time. Because as long as these consistent flows are there, I don't see that somebody goes and stops their 5 or 10-year SIP based on a short-term reaction in the market. So I expect that a lot of buying support will keep the mid and small caps from falling very deeply, except, of course, at the tail end, where a lot of companies without fundamentals went up. But by and large, mutual fund portfolios are anchored around future 3 to 5 year outlook of a company, its growth, its entry barriers, its scalability. So these are fundamentally strong companies in which mutual funds are buying. So the other point I want to add is, as long as you stick to your mid and small cap component through a mutual fund, a diversified mutual fund, I would say that there's really no need to do a major reallocation. Yes, a small reallocation into large cap. And there again is the flows which are driving my thought process, because I see FII flows returning now in a big way with the GDP numbers coming. And with the elections, there's no negative surprise. The continuity of the government is more or less assured. So long-term money from FIIs coming in would tend to buy, obviously, a lot more large caps. So I expect bulk caps also to now step up and do, narrow the gap between mid and small cap returns and large cap returns. So a slight tilt in terms of a portfolio, stay multi-cap, give a reasonable weightage to large cap, mid cap and small cap. I would say then you're good to go.
Okay. Sunil, hi, welcome to the show. If you had to just break it down sector-wise when you're looking at the large caps in terms of themes that could play out in the next couple of months, considering that we do have the elections that we're going into, what would your top 3 sectors be?
So my top would still be banks. I still think that for 2-3 reasons. So one is that it has come under pressure in the recent past because of the biggest player in the sector going through some challenges, more from a beneficial owner SEBI regulation perspective than from really fundamentals, because I think the fundamentals have been as bad there. But banking and financial services would continue to be my top pick because 2 reasons. One is that I expect the FII flows, to the extent that they come in passive form. The last 3 years, passives have dominated the active flows into India. They would buy the index. And if you see in the index, 30-35% being from banking and financial services means there's going to be consistent overseas buying support within large cap for banks and financial services. That would continue to be a top pick. The second pick there, I would say, is a domestic-oriented industrials manufacturing space, right? Because that, I believe, is the one. And there are only a few companies in the large cap which have made it to that kind of a size. But because the story is of India growth, because the international story of America and Europe is still not clear. Every week data comes, tilting one way or the other. We don't have a clear clarity in terms of a strong growth path in the developed world. So the growth story of India, to the extent that's possible within the large cap and the larger mid cap. So I would say that will go. The third would be consumer discretionary with auto, high-end retail, discretionary consumption, because I see that that's the space where the incremental growth, and I see valuations also as more reasonable there than in a few other sectors. So for me, banking and financial services and domestic industrials, as well as consumer discretionary, are my top 3 picks.
Okay, and if you want to further get into these sectors, banking and financials, the place to be has been PSU banks. Private sector banks are looking yummy, but so to call it. If I look at Kotak Mahindra Bank, X of its subsidiaries, the core business on a price to book, or if I look at HDFC Bank, X of its subsidiaries on a price to book, look, they look absolutely brilliant. Someone told me a couple of years ago, you'll be getting these stocks, you're getting HDFC Bank at 2 times price to book, you'll be saying you're kidding. Now the time has come where you're getting it. The problem is in the near term, because the CASA has come down so much and the cost of deposits has gone up to that manner, the NIMs could be under pressure, and that could be a trade-off between growth as well as NIMs. So how do you approach it from here on?
I would still say that given the correction in the valuations, as you correctly pointed out, they represent very decent buys. Yes, I agree that the NIMs will be challenged, but I think the good point is that the next leg of lending on the banks, you already saw retail lending has led the way in the past, but the next leg of lending is going to be corporate lending on the back of corporate capex growing. I still think we are 6-9 months away from a private capex cycle really taking off. But when that happens, I don't see that the NIM pressure is so much, because in corporate lending, with the ability to give big ticket loans on strong balance sheets, right? I think that the NIM pressure can be managed, and the volume of those loans will compensate for a lesser NIM also. So absolute profit growth, EPS growth should be strong. So I think that, yes, for me, private sector banks look fairly attractive from a medium-term perspective.
Sunil, wanted your thoughts on frontline IT, and what kind of weightage are you giving to it in your portfolio?
So I'm relatively neutral there. I'm slightly, I would say, more favoring the larger cap versus the mid and small cap, where there's, I think, a little bit of valuation pressure. So I would say that it's a neutral. It's still not a strong buy, because ultimately what's happening is that the rupee has been fairly stable. So a weakening rupee is what supports the sector. We don't see that happening in the near future. Second point is that there still isn't a strong growth coming out of the US and Europe. IT companies are essentially going to grow from the business growth there. So I would still say that it's a safety sector, retail neutral, with a tilt towards larger cap companies there.
Okay, all right. Sunil, I also wanted to ask you about this entire hospital fiasco that's been taking place. Whether or not the rates will come down or not. Some would say, if I've got the money, I'm willing to pay top dollar for the best treatment. While others would say, hey, maybe they're making too large profits, so might as well they skim down a little bit and give good quality at a decent price. Stocks like Apollo Hospitals, which have really been the flag bearer and command the highest valuations, in the last week, they're down 10%, providing an entry opportunity, or you think still things can go anyway? So wait for clarity and only then you look to get in.
I would still wait for clarity there. So I think that the direction is not very clear, because see, the reason these hospitals raise rates and all that was the increasing insurance penetration. Now, when insurance company is picking up the tab, right, for your health insurance, right, then the resistance from a customer to that is less. And the penetration of insurance is making these hospitals also tab on. In fact, you go to any hospital and say, I want to pay cash and not rely on insurance, there are big difference in rates. So I think it's a part of that. And I think that we'll have wait and see, right? There, at some point, there will be resistance saying, why should I pay so much, right? So I would still wait and watch on that. I think it's early to make a move based on this price correction.
Okay, all right, Sunil, we're going to let you go on that note and enjoy your Saturday. Thanks very much for joining in and speaking with us and giving us your perspective on a whole host of sectors as well as the market. But moving on to the big event in Jamnagar last evening was the first day of the pre-wedding celebrations of Anant Ambani and Radhika Merchant. The Ambani family welcomed celebrities, business tycoons and world leaders to the 3-day bash, which is being held ahead of Anant Ambani and Radhika Merchant's wedding later this year. The guest list for last night's event featured leaders and bigwigs across the world of sport, industry and politics. Prime Minister of Qatar, Microsoft founder Bill Gates, Meta's Mark Zuckerberg, Ivanka Trump, and a host of Bollywood and sports stars were all in attendance at the star-studded event. The guests were also treated to a performance by Rihanna, who performed some of her all-time hits including Rude Boy, Pour It Up, Diamonds and Wild Things. She also gave her best wishes to the couple. Mukesh Ambani, in his welcome speech, also marked the importance of the event being held in Jamnagar and said that his son's "nothing is impossible" attitude also reminded him of his father, Dhirubhai Ambani.
Today, my father, Dhirubhai, is also showering his profuse blessings from high up in the heavens. I'm sure he's doubly happy because we are celebrating this joyous day in the life of his favorite grandson, Anant, in Jamnagar. Whenever I see Anant, I see my father Dhirubhai in him. His same can-do, will-do, nothing is impossible attitude.
Well, the Reliance Industries chairman also spoke about Jamnagar was a karma bhumi for the Ambani family and promised that Jamnagar would give people a glimpse of the rising new India, which is vibrant, optimistic and full of self-confidence.
Jamnagar became the karma bhumi for my father and me, a place where we found our mission, passion and purpose. Jamnagar was a totally barren land. It was a desert 30 years ago. What you see now is the realization of Dhirubhai's dream. Jamnagar became the turning point in the history of Reliance. It continues to be a place where we launch futuristic businesses and unique philanthropic initiatives. Our sole aim is to enhance India's prosperity and contribute to the well-being of planet and all its people. In all humility, I say that Jamnagar will give you a glimpse of the rise of a new India that is vibrant, optimistic, and full of self-confidence.
Okay, on that optimistic note, we'll take a quick break. When we come back, we'll be talking to Mitesh Thakkar and Shrikant Chauhan for a technical check. Stay tuned. Welcome back. Well, in terms of stocks, currently we're seeing a little bit of traction coming in on Tata Steel. So that stock is up around 2%. We have Adani Ports, which is up around 0.8%, and something like Bharti Airtel, which is just about floating in the green at this point in time. A little bit of downside on the likes of Maruti, Dr. Reddy's, which was under pressure in yesterday's trading session on account of a litigation possibly on Revlimid generic, and even something like a Nestle and Apollo Hospitals continue to be a bit sluggish. But Mitesh Thakkar and Shrikant Chauhan are back with us to discuss the technicals towards the close of the session. Mitesh, over to you. How would you probably approach a couple of these metal counters which are seeing some amount of strength?
See, disclaimer that, we have positions in Tata Steel and SAIL, and is a recommendation to a client as well. So there's some vested interest. I think I like the entire pack. The ferrous stocks, the steel stocks look much better placed than the rest of the pack, but I think even the other stocks, like I had a buy call on Alco today in the morning, are looking strong. So I think metals should do very well. But in the metal stocks, I think you will find Jindal Steel Power, JSW Steel, Tata Steel, and SAIL do slightly or outperform the other aluminum-based stocks, etc. So I think maybe you would want to focus over there. But the entire pack looks very good. If somebody is having positions, hold on to them. Just trade your stop losses to the 10-day average, and if somebody wants to buy them, I would still be comfortable buying into SAIL and Tata Steel.
Okay, SAIL and Tata Steel, trail your stop losses. I think 20 DMA you said, right? Should be the stop loss? 10-day DMA. Got it. Yeah. Thanks for that.
So I think, the idea is that, they are enjoying strong momentum. Typically in strong momentum, I think the 10 DMA is a good trading stop loss to follow.
Got it. Perfect. We've cleared that one in terms of these metal stocks. Shrikant, you come in. A few minutes to go before we wrap up. But what are your picks that you'd like to share with us?
I think, like Nigel, from the metals basket, there are like number of stocks which are really doing well and they are crossing their important resistance level. In that specifically, we like Vedanta, which is now currently around 273, 272. From here, again, the stock can move to the next levels of 284, 285, and it has made double bottom close to 260. So I think Vedanta is like at current levels, excellent buy with a stop loss at 260, target of 285 and 295. The other stock which we like